This is Jonathan Mickles with the Strategic Multifamily Investing Podcast, and today I have with me Mr. Randy Langenderfer. How are you doing today?
Jonathan, I'm doing great. Thanks so much for letting me be on your show. I'm looking forward to it, and just to really appreciate the opportunity to have a conversation this afternoon.
Absolutely. Thank you so much for wanting to join us here at this the smallness that we are right now. So you have a brand out there, a company called InvestArk. What are you all about? What's your game in this multifamily world?
Well, that's a good question for us to get started with. So, InvestArk Properties is the company I founded about 10 years ago, and I started out with just my own money, invested my own money in other people's deals. In 2018, I did my first general partnership deal. Since then, I'm in 1,500 doors as a general partner. And so InvestArk Properties is simply out trying to find properties to buy and attract investors to join a syndication to buy them. So I'm a traditional syndicator, but looking for properties and looking for investors.
So what is a traditional syndicator? That's a very good distinction. What does that mean?
Yeah, so syndication is, so someone called, my wife jokes at me, I'm well educated. I have an MBA and I'm a CPA, which really doesn't mean anything in this industry other than I took a lot of exams. But a syndication, when I understood a syndication, I have a financial and a very analytical mind. And when I understood that, I can buy a multi-million-dollar asset, multifamily property with a non-recourse loan using a syndication, basically other people's money, is a syndication of a group of investors pool their money together to buy an asset that's bigger than any one of them. So we are in the process of just doing one now, a build to rent in North Dallas. And we're trying to raise $8 million out of 46. And so that syndication will own the property, and that syndication will be divided between general partners. They're the ones who find the deal. They put money at risk to get the bank loan and to buy the land, et cetera. And there are limited partners, those who are along very passively. They don't have decision-making capabilities, and they get to reap a nice reward.
So is this a 506c type offering? Because
this one is actually a B, as in boy, offering. So we will accept up to 35 sophisticated investors, not just accredited as well.
Got it. So this is the family friends. That means you must have a pre-existing substantive relationship with them before they're able to buy. So whoever's listening to this, they get there. Hold on, you got to make sure you already have a relationship with Randy or one of the other people on the GP before you get to invest and such, right?
Well, and that is a great distinguishing point for your audience. You don't want to run afoul of the regulatory environment, and because it can jeopardize the whole investment for everybody. So you nailed it. You know the rules. 506B as in boy, you must have a pre-existing relationship prior to the offering coming out, and a 506C as in Charlie. You can advertise, but you only have to accept you can only accept accredited investors. And is your audience understanding the definition of an accredited investor?
Yeah, we've bantied it about a little while, but we understand that the rules have changed a little bit, right? In terms of what now is an accredited investor. We're recording this in July of 2024. I think that the rules have changed a little bit. Am I correct?
I've heard they're in Congress. I've heard it's not been officially voted on and passed, but those rules were developed in the 80s, and the existing number, as you know, is $1 million. To have a net worth of $1 million or an income of
$250,000 is single, $500,000 if you're married, but the $100,000, the $1 million net worth does not include your personal residence, correct?
That's correct. That's my understanding as well. But my point was going to be is when those laws were written, $1 million was worth a whole lot more than it is today.
Yeah.
Many would say that $1 million, if you adjusted it for inflation and brought it forward, it'd probably be more like $3 or $4 million today. But we're hoping they don't go that high.
Yeah.
because that would greatly limit the number of investors. And I think it's somewhat shallow on the government's part to do so, but I'm not an attorney, so.
Well, they say there are a lot more millionaires that are being made every day. And so, there may be a lot more people who are in that bracket, but I think it would limit the number of people and the type of offerings that you really want to do. You know what I mean? You really would have to go back and rely on the Bs. As I understand it, statistically, the 506B, Regulation B offerings are more uh, common than, if you will, the 506Cs that you can publicize out there. But let's talk about, given that you're doing a B and, you've been doing, traditional syndication for a while, pulling together investors, both those that are silent and then those that are more active.
Sure.
What is your process, if you will, for ensuring that you have that pre-existing substantive relationship?
So that's a great question. It's something that's old-fashioned bootstrapping, as I would call it, or networking. But I started out when I first started doing this of trying to keep track of those relationships in a spreadsheet. Several years ago, I purchased access to a CRM, customer relationship management tool. The one I use common in real estate is called Active Campaign.
Yep.
I'm not endorsing it, but it's a good one. And so really it requires you as the syndicator to document that relationship. And, so it doesn't count that, hey, I passed Joe in the hallway at a networking conference and I can accept his money. You really have to document. I've heard as much, I guess it's an art form, but I've heard as much as 3 conversations about real estate to demonstrate a pre-existing relationship. And
So
so
you're scheduling, conversations, those 3 different conversations, like you're asking them to,
yeah,
do you have them filling out a form? What kinds of things,
I don't
it's
have
a
them
little bit
filling out
more.
a form. Some do because I do both B and C offerings. And there's a lot of people that only try to attract C investors, accredited investors. I'm not that way yet. So my process is really I am today, I've exhausted the friends and the family. So I'm using tools to mine the internet, LinkedIn more specifically, and begin to build relationships with affinity groups, people that went to the college I went to. And so I'm really trying to broaden it, or the profession I was in before I left corporate, and trying to have an initial conversation. Just, are you interested? Have a follow-up conversation with them to determine their more detailed level of interest, send them information. And then if there's an offering, I can have another conversation with them. So I put them on a newsletter, try to get something out to them at least once a month, if not more, just industry updates, news, things that InvestArk is doing, properties we're potentially looking at, et cetera, et cetera. So,
Okay. So then other than, say, Active Campaign, which you're using, I'm kind of using it. I'm thinking about pivoting to another platform, but are you, once they are, the relationship has been established, do you then move them to yet another platform in order for them to, as you're managing properties that you are taking down? I mean, what are you using there?
so the active campaign will allow you just to designate them as an accredited or sophisticated. So I can run a quick list and say, here's all my accredited investors. Once they actually invest in a property, so let's say this current opportunity I'm just talking about in build to rent in North Dallas. Yes, we have an investor portal. We use the Invest Next portal, not to be confused with InvestArk, but that is a commercial portal. It just adds professionalism for the investor. So all your documents are maintained in this portal, your private placement memorandum, your operating agreement, your subscription agreement, all your monthly updates, your K1s. When I push out monthly updates for the
Mhm.
properties that I'm operating, I want them to go to the portal. I'll give it to them in an email, but I want them to go to the portal as well to get it, so that obviously we're getting our money's worth. But the portal is essential, I think, one, for in for the new investor, that I wouldn't call it a red flag, but I'd be very leery if someone didn't have one today. It's pretty standard, and it just adds simplicity. And there's many out there. I can name 4 or 5 off the top of my head. They've all got pros and cons. One is not necessarily better than the other one. It's just different. So you shouldn't have to worry about that. But I think there is a need for one that everybody should have, a potential yellow flag, if not red flag, as an investor.
Yeah, I think so. Because again, not only are your documents, if you will, for the PPM, the private placement memorandum are there, but then your K1s can be distributed there. Your monthly updates for whatever the properties are that you're investing in can be there as well. And any other data that may come from, say, the property management software like Yardi or
Yeah.
some of the other platforms integrate very well with some of these other systems. So you're able to really look at the numbers, directly. And then, of course, there's an overview every month that I'm pretty sure that someone like yourself may be preparing, that will then outline exactly what the numbers mean, right? The story behind the numbers, not just getting access to the numbers. So this is a lot of work. Generally, how large are your GPs for the syndications that you're working with?
Well, they vary. So I've been, and I want to hit on one. There's communication we need to come back to
Sure.
investors, but the size of the GP team really varies. So I have co-ventured or joint ventured, whatever you want to call it. In the deals I've been in, there's anywhere from a $10 million deal to a $120 million deal.
Yeah.
So I have a very big part in the $10 million deal. Lead partner, asset manager, capital raiser, KP, all those things. Some of the other ones I've just been a KP on.
Yeah.
Key principal. That means to your audience, I lend my balance sheet or my net worth to the project for the bank's approval. And I've been a money raiser on some partners. So I think your audience also, if they're fairly new in this game, needs to really, there's 2 things you ought to talk about: is developing a team and back to communication with investors.
Let's go back to communicate. I want to know what market you're in right quick, and then we'll go back to communication because I want to, that's definitely good. So what markets are you in currently?
So I focus in the Sun Belt. So I have property in Greenville, South Carolina, Houston, Dallas, and Tucson, Arizona. And each of them are with, not all, but different partners for the most part that have a different perspective. So one of the things you want to do if you're getting started in this industry is you obviously want to begin to build some relationships.
Yeah.
You and I know this is really a team sport.
Oh, yeah.
And that can't be understated. A team from brokers, bankers, attorneys, and then the team to actually take down the asset, the general partners. And the numbers are so big today, it's difficult for people to write. Most people can't write a 7-figure check.
Yeah.
So it requires a syndication with multiple investors and multiple talents. So you want to find people that complement your skill set.
Mm-hmm.
I'm an analytical type.
Okay. I'm sorry. Go ahead. I stumped on you. I was going to ask you another follow-up question, but go for it.
Go ahead. No, go ahead.
Well, I was going to say it takes a lot of different people. And you mentioned that you're the analytical type. When you're looking at people in the GP or even in the LP group generally are the silent partners. What kind of values are you looking for? What kind of people are you looking for? When you're expanding and growing, I guess.
So the great example I give that, Jonathan, is I wanted to be in Phoenix, Arizona pre-COVID.
Oh, yeah.
And I had made several exploratory trips there. I'd begin to build relationships with brokers and property managers, et cetera, other people. And I was tactfully told, "A nice guy, Randy, but you don't own in this market and you're not from here. So you're probably going to have to overpay for your first couple projects." And I'm going, that doesn't sit well with me. So COVID happened. I came back and I found a partner out there who specializes through networking, different conferences. We happen to be in the same mastermind.
You want to shout
And
out the mastermind?
Rod Khleif's mastermind,
Gotcha.
uh,
Cool.
the boardroom, his boardroom, and it was a great, there's I'm a neophyte in that audience because there are people that are just really big time. So I enjoyed being there. But anyhow, I met this gentleman who's he lives in California, but he specializes only in Phoenix. And so he invited me to come along on one of his projects. And, he just escalated my curve immensely. And I'm in, I could go back to Phoenix now and say I own in this market. And I wouldn't be lying. And be truthful. So the value of partnerships. However, Rod's the one that told me, and it's true, he puts a lot of emphasis in this. Partnerships are like a marriage. They're easy to get into, but they're expensive and painful to get out of.
Absolutely.
And so you really want to find out about the character to the best of your ability. So the gentleman I partnered with in Tucson, I had known him for several years, anyhow, at least through different networking and podcasts and et cetera, et cetera. I had a great reputation, but I went further. I talked to other people that are in the industry. It's a big world in the U.S., but it's a small world in the multifamily space. So you can probably ask the last 5 guests in your show. Maybe only 2 of them even know me. Maybe only one of them. Maybe none of them know me. I don't know. But you could get a pretty good read on me just by looking at the internet and asking people who I know and what my reputation is. So I did that. And then I made a next effort of, okay, I like this gentleman. And I started to review the paperwork. So then I got into his underwriting because that's a big deal, as you know. And then started to look at his paperwork, the PPM, the operating agreement. How are they written? For your audience out there, they're a snoozer to read, but you've seen one. They're all a little bit different.
Yeah.
How are distributions made? Who gets paid first? What are the LP's rights, if any, et cetera, et cetera. You may find them extremely boring to read, but I still read everyone I invest in.
So you read back to forward, or you have your attorney to kind of review the findings?
I wish I had an attorney to do it, but I really, the things I focus on
Sure.
is the GP's rights.
Got it.
The GP, the capital mix, how distributions are made, because there's a lot of differences out there. I mean, return of capital, return on capital, which comes first, how it gets paid out, how the proceeds get paid out upon sale. Big one for me, and you don't see it much anymore. When I first got started 10 years ago, LPs had rights. They had more than just to write the guy out. We had to approve the sale, and we had to approve any refinance agreement and stuff like that.
What about cash calls? I mean, you looking at that? Because I mean, right now with some of the hurt that we have, right? That's
very definitely.
How are you able to do a cash call when, who, does it dilute the position, et cetera?
Preferred distributions, are they just preferred, or are they cumulatively preferred? I mean, there's another big one. There's a big difference if they're cumulatively preferred, and who gets paid first in the preferred structure. So there's the cash call is a great topic these days, and every PPM is going to be a little bit different, and how that cash call gets repaid.
Is it a loan, or is it, exactly.
Is it a loan, or is it equity? Upon sale, does that get paid back first, or is it just like a common equity with everybody else? Those differences can mean a lot on your return as an LP.
Absolutely. So then you read all the PPMs and et cetera. So how did you land on, what was the thing that made you say, yeah, he's okay?
When I first became a limited partner, I mean, I was in a large national educational group, and so my relationships came through there, and so the first one was I read the PPM, every word, all 50 pages of it, And about the second or third investment I made with the guy, I didn't obviously do that level of due diligence because there was a whole lot of trust in between. So you find those relationships, and then you just nurture them and continue to stay apprised. I asked when I was first became an LP, I asked the general partner, "Hey, look, I have aspirations of doing what you want to do. You're doing someday. Can I ask you questions periodically?" And you find most of the people happy to do so as long as you don't bug them every hour. But I would call every other month and schedule a half-hour call and just ask some questions on the financials and the impending business implications. And I think you'll find most GPs are happy to do that as long as you're not like calling them every week and every nickel and dime. But so there's another way just to understand and build a relationship with a general partner.
You mentioned communication, and you wanted to say some things specifically around that. Um, Feel free to share. How important is that, and how do you build that within your organization?
So I mentioned I'm a limited partner and a general partner. Today, I still invest in other people's deals, and so you find out the character of an individual when bad things start to happen in their style of communication. So there is one national person out there, I won't mention the name, that has fallen upon hard times and had a lot of deals taken back, foreclosure,
Sorry
and
to
had
hear that.
others cash calls. And I've been in his group, in his investor list for some years, probably 8 or 9 years, and he's made me a lot of money, but he's made some very poor decisions. But point of it is when investors started calling, he went radio silence. You couldn't get a hold of the guy. Huge red flag. I before would have invested anything with this guy if I had it. Today I won't invest anything with him because he's changed. And one big red flag there is communication. So your audience starting out, that should be one of their questions they ask the general partner. Can I see examples of your communications? I'm sure you have seen them. Some of them are 5 bullet points and some of them are 3 pages. They vary. Again, you've seen one, you have seen one. There is no industry standard. It's tells their personality and character. I'm invested in one that recently had a cash call, and it was just last month. I just got the letter that said we need a cash call. And I said, wait a minute, you didn't give us any warning. You didn't give
There's
us
no
any.
ramp up.
There was no indication the property was going bad or what's up, and that tells you a lot about the group.
Yeah.
Again, I won't remain nameless, but
Sure.
communication is important. My first general partnership deal was in Beaumont, Texas. And for your listening audience, it's about 100 miles due east of Houston on I-10 between Houston and Lake Charles in Louisiana.
Mm-hmm.
We bought the property. It was an old property. And 2 months into it, we had a fire. Took down 28 of the 132 units.
Wow.
And happily, nobody was injured. But I got on the phone and I called each investor individually and had a conversation with them before I sent out anything email. Because maybe it's just because it's generational, it's my age group.
So let me pause. Let me break this down a little bit more. So how many people were in the deal? Because again, we have, for everybody else, again, I always like to rehearse even multiple times in our own podcast. The GP is the leadership team, and then the LPs are those that are pretty much the silent partners. How many people were there in the GP team for this particular deal?
There were 3 GPs. There were approximately 27 investors in total.
Got it.
And probably 10 of those were mine.
Got it. So you
Another
called
17
all of yours, or you called all 27?
No, I called all of mine, only
Got
mine, people that I brought into the deal. They invested in that deal because they knew Randy.
Got it.
They didn't invest that deal necessarily because they loved Beaumont, Texas. But to me, again, I'm a baby boomer. I like the personal touch and the professionalism of somebody calling me with bad news versus somebody only calling me when there's good news on the trial. And there's organizations that are way too big today, they can't do that. But that's why I'm a boutique guy. I want to remain small and targeted and focused on good deals. And that's just, I guess, the investments. My wife said, do you think everybody else does that? And I said, I don't know, but they've invested because they knew me.
Right.
And they need to hear the bad news from me as well, not just in an email.
Do you think it would be good to, my profession is an IT project manager. One of the
Okay.
things, depending on how large the organization is or how large the project is, et cetera, is that we put together a communication plan, right? That says this is how we're going to communicate. So every month you'll get this, in the context of say this, every month you'll get a understanding of what's going on with the project. And, here's a template of what that communication will look like. It'll come via email, it'll be into your portal. Some people even will have like a webinar, right? Of
Right.
sorts that will be recorded. And so people can ask questions at the end of the webinar. It's recorded for anybody else who missed it. So every month you can see what's been happening with the project. But one of the things that I've found in putting together some of those communication plans is that you kind of do what some people would call, say, stakeholder. Um, oh gosh, I can't. It's it was just here and it left.
You're too young for a senior moment.
But it was it's stakeholder identification. It's not that stakeholder identification. It's going to come back to me. But essentially that's where you ask them, how would you like to be communicated with, right? Not just how I'm going to communicate with you, but how is it that you would like to be communicated with? And so some people they're pull people, meaning,
Right.
hey, Randy, I'm going to call you when I have a question, just like you did before with that other one. And there's some people who are push people. Hey, I'll get the updates that are in the portal, or you send me an email if there's something going on. And then there's some people who like to just do the hub thing, and the portal is the hub, is what I mean. Is
Right.
all of the stuff is there. I can go in there and figure out whatever it is. And some people think it would be overkill, but I'm pretty sure that all of those people who were invested in that particular deal love the idea that you were giving them a call directly in that sort of situation, right?
I remember the one guy said straight up, he goes, well, you're the only guy I ever know that called me with bad news. Everybody usually calls when they only got good news or, the holidays or something like that. But I just think it's just the way I want to do business. It's just common respect. Because, let's face it, Jonathan, we know these are all businesses. It's not always, trees don't grow to the sky. So everything's not going to go to the sky forever.
Right.
If you're in this business long enough, you're going to have challenges. And there's another question for your audience to ask general partners. Talk about some challenges you've had. And if they haven't had any, that's a cautionary flag as well, because they haven't been in the business long enough then. But over communicate. So I guess my philosophy is when challenges occur, you need to double down and communicate more often.
There you go.
If it's twice a month or then less often, you need to, and recognize I've been in some tough spots where, you don't know the answer yet. And so the tendency of the general partner is not to call until they have the answer, whatever the answer is. And it's going to give the investors
Confidence.
comfort that there is a way but I think because that answer may not come for months, is my point. So I just think that full transparency and investors respect it when you say, hey, this didn't happen. Excuse me, as we projected. It didn't happen as we projected.
And so now
Here's what we're doing about it.
Right.
And this is
you may
the
follow it up with a webinar, say. You may follow it up with a call and, hey, there was a fire. I just want to let you know there's a fire. We're on it. With, the police are there. The fire department's there. We don't know exactly, what happened or whatever, but we'll, this week we'll be following it up with a call. So just wanted to let you know.
In that example of the fire, Jonathan, it's amazing when you talk about it. People are humans all over. I think I can't tell the number first time that, how are the tenants? And
Mm.
that should be the first question. Was anybody injured? Is everybody okay? How are we providing temporary living? How are we doing that? Versus, my distribution is going to be discontinued. Um, and you see the nature of investors too, because I saw both sides of that on that call. But it's so true. The first, so I'm very happy to report nobody's injured. Everybody got out. Total loss on 28 units. American Red Cross has been notified. All the people have temporary housing. So that's the way the communication started, not anything about the investing side of it, is to let people know that we're in the business of providing housing to people, and that should be our primary purpose.
Yeah. Another question for you with that. I know we've spent probably more time than you want to talk about communication, but I think it's important. I have two questions. So do you think that, GPs who are new in that situation and may not know, how to respond to that because, panic is the first thought process in that for a lot of people. Do you think that they need media training?
Well, that'd be a great one, Jonathan. I think this is the piece that isn't talked about enough in some of the big box educational arms that there are out there. I've never heard anything on that, formal training on education. We all tend to worry about the analytics, the underwriting, the marketing, the banking, the construction, et cetera, et cetera. I think, your point about your real life where there's a project communication strategy, that's actually a great idea, especially in time of crisis. I was afraid you were going to ask me, did you have something like that? And the answer,
They
and the
would
answer
call
would have been no.
I remember now, they would call stakeholder interviews where you would then interview every stakeholder, every person who's investing to find out how they communicate or they would like to be communicated with. And you marry all of that together with the stuff that you currently are going to do as a part of your investor relations, because that's generally the term, if you will, or the role
Uh-huh.
that we're talking is investor relations.
Yeah.
And that gets wrapped up into that investor relations plan. And now everybody knows when the defecation hits the ventilation, we go to that plan. Oh, and I need to call Bob because Bob needs to have a call. You know, Jim is okay with the email. I'm still going to call Jim, but I'm going to make sure that Jim gets that email as a follow up to the call because I'm going to.
Yeah, so my strategy is I would say I wanted to make a call first, but I followed up an email to everybody,
There you go.
echoing what the future steps were and probably reiterating what I just said. But I wanted them to hear it from me first.
Yeah.
I didn't want them to see it on the news station, of which it was, or some other place, because investors all over the country. And maybe I'm just a mature individual, but that's the way I want to be told on my investments.
No,
And
that
at a
makes
very minimum, don't hide the bad news. That's the
right.
biggest thing.
Right. There's a lot here. There is a whole lot here in terms of the things that you've learned over time, being in 1,600 different units, in various capacities. How did you learn and, how are you, maybe even training some of the new LPs that want to come on board or potentially new GPs?
Yeah, I said first I spent a lot of time, or my father spent a lot of time on my education for college, whatever. Went to grad school and stuff like that, and so I'm real big on education. And I think that's one of the fallacies or one of the challenges is people are reluctant to spend money on their multifamily education when they spent. You're going to spend if you're going to invest, you're going to spend hundreds of thousands of dollars investing. Doggone, you better know what you're getting into. So when I started, as I said, going to one of the big box educational arms, networking. I was a stickler that I wasn't going to pay what I thought was an enormous fee to gain some of these groups. And so I just started investing. I took my own money and I found the guy that I know, liked, and trusted, and I invested in his first deal. And I walked with him and we had conversations and I offered to do, if he needed help any place, I'd do it for free. I'd walk the property. I'd help him do due diligence. You need somebody to go over and check on something, just ring me up. I'm happy to go over. And so that's the way I started. But the point of it is I've been doing this for 10 years. How about yourself? How long have you been doing it?
I've been in and around. I'm an old school newbie, I will say. I have
Okay.
zero properties under management currently. So it's been about 2018, 2018,
Yeah, but the point of it is, it doesn't matter whether you have zero, you have 10,000. We're all going to be lifelong learners. At least I like to
Absolutely.
consider myself a lifelong learner. That's the only distinguisher I was going to make, because when I was 0 years into it, I thought I was the dumbest person on the planet. I wasn't the dumbest. I just didn't have any experience or any knowledge in this space. And look, somebody told me a long time ago, Randy, this isn't nuclear science or brain surgery. Just follow the playbook of those who have gone before you. And, and it sounds too good, but it's true. Just follow the playbook of those who have gone before you. And the playbook is fairly widely known. You can go into a lot of intricacies. There are a lot of intricacies in it. And so I have a partner and I that are equally yoked, and we're on a mission to help give back. And so we recently started an educational arm or a mentoring program. And I mentioned the big box, and I've been in 3 different of those big boxes: Khalif, Lifestyles, and Sumrock Organization at various points. So I think I've seen a lot of those different areas, and I call them the big box, where there's just thousands of people. And so that's what I call the Home Depot approach. I'm trying to create the true value hardware approach, where when I walk into the local Home Depot, it's hard to find somebody to help me with a problem or an issue. When I walked into my True Value recently, and somebody met me at the door and said, "Hi, how can I help you?" And so it's just a much smaller, it's a much more hands-on, customized, personal approach that we're trying to give to help people find out how to become a GP. Or even if you don't want to be a GP, if you want to do an LP, I think there's many lessons in there to be learned about broker relationships, about underwriting, about communications, et cetera, et cetera. And so we're trying to do that. We have a year program, but if you're allow me to shamelessly pitch, what we're
Absolutely.
trying
Go for
to
it. Pitch.
we would like to offer anybody on your podcast the opportunity to join us for 30 days. And the course consists of about 35 different online modules, everything from underwriting to what's your why to broker relationships. I said there's short videos. You get access to those, and you have access to our group calls once a week, every Wednesday night, for only $197. So if you have any interest in this, love to chat with you offline. But we're making a few bucks out of it, but it's not making us rich. So more intently, our purpose is to giving back and to helping those, like I said, understand the playbook and to how to follow it.
There are a couple of positive things that I see immediately in this. Number one, as an LP, you can use this education to vet the GPs that you may be interested in dealing with, right?
Yeah.
You have a couple $100,000 and you're going to go do self-directed, whatever. Where do you put it? You want to invest in multifamily. This kind of education will help you to do that. Number two, if you're interested in becoming a GP, right? Knowing what what things to do, what not to do, what roles exist. I mean, we've only delved in here in a couple of small ones, talked about investor relations, but we still haven't talked about what a KP is, a key partner, and what kind of mortgage things that you need to have. That's important, to figure out what that GP team needs to look like. And then also too for yourself, I think this also could help you and your partner with vetting, people who are interested in, but coming on to be a part of an LP for a future deal, because you've trained them, if you will, on how you think
Yeah.
and the things that they should be looking for.
nothing would even make me happier as if a student found a property and they wanted us to help buy it with them. Um, that would be kicks and giggles because, like you said, they know how we think, they know the methodology. But that's a secondary option
Sure.
uh, because if we're not providing the value of how to do this, and and it's I've got three students right now, and I see their eyes just feel like they're drinking from a fire hose. Well, and they are, and you and I were too, and I
Oh
still am
yeah.
in some extent.
Oh yeah.
But at least you've got a repository of information where you can go back and look at it at some time, and you can have access to it. Um, it's so helpful. I mean, I kept such copious notes when I got started, and I still got them in my file someplace. And periodically, I look back at them on a lot of those topics. So, uh, people ask me, it's education and it's persistency are my mantras, or what I continue to talk. Education and persistence. The market's going to come and go. There's those out there that want to go rich, go quick. I prefer the go slow, go steady model. But that's me. If you want to go fast and you've got the wherewithal, we can help you too. But it's doable, but it takes work. And the average person we're talking to is like, like you, and like I got started when I got started, man, I'm working 40, 50 hours a week with a day job.
Exactly. Yeah.
I got kids, I got a wife,
Yep.
and I get it all. I've been there. But persistency over a period of time, staying with it, even your day job, man, you went to college, you educated yourself, you're working at it, you put a lot of time in it. You didn't do it all at first. You didn't start where you're at.
Nope.
You didn't start where you're at. You started someplace much lower in the realm, and a lot dumber. And I don't even know the company you work for, but that's fine. But
Yeah.
my point of it is persistency and education. And I really just want to. I'm the living example. If anybody can do this, if I can do this, anybody can do this.
Yeah.
I am not anything original or rich or anything else. It's just slow and steady growth over a period of 10 years.
There you go. And you got it. And so you've been able to get yourself free in the process. Am I correct in saying that?
I am, sir. I left the corporate world a year ago. My journey started 10 years ago when I realized I need to find, because I thought I was going to get laid off
Yeah.
for the economy, because of the economy. And it was a earth-shattering moment for me to realize, dude, you got to find something else. And that's where my whole journey started. And so if I had started more proactively earlier, I'd probably be in a lot different place today. But that's okay.
But you're here and
Yeah.
you're free. And you're showing other people how to be free. Once you get to the other, you get converted, you go back and you strengthen your brother and sister, right?
And that's probably a really good illustration is the conversion aspect, or the terminology you just used, because when you catch the bug, I'll call it the real estate bug, the real estate fever. You're part of as my wife calls them, a nerd group. She tells me, Randy, just go hang out with all your nerd friends and be happy.
Yeah.
And I am, because it's a good group, but it's a fairly small group across the country, and there's some really great people in there that I've had pleasure of meeting with. I'm sure you can name 2 or 3 or 5 people that have built into your journey along the way.
Oh yeah, absolutely.
And that's kind of what I want to be, is somebody look back 10 years from now and say, Langenderfer, yeah, he helped me get started.
Here you go. Well, I want to ask you about, you talked about the market and that they come and they go right now, and mid-July of or the beginning of July of 2024, in a very interesting place, if you will, within the markets. We talked a little bit about some of the hurt that some people are experiencing with cash calls, which pretty much is, the property isn't doing too well. We need an influx of cash to kind of keep it moving, and there's still some alleged hurt due to a lot of people using bridge debt some years ago in order to finance, properties, and some of that stuff is starting to come due, and the interest rates being so high that they may not be able to refinance and keep the property performing at the original plan that they had. I don't know. Maybe I'm painting a dark picture here, but I'd like to hear what you think about the market currently and where you think we're going.
If I could answer that one intelligently, I'd probably be on the speaking tour making a whole lot of money. Um, but I have I think you summed it up pretty well, Jonathan, as to where the market is. I mean, if you bought a property in 2020, 21, or 22, you bought it on bridge debt because it's the only thing that was happening, variable rate debt. And the majority of them were written on a 3-1-1 loan, meaning
Mm.
there were 3 years and two 1-year extensions. And if you were smart, you bought rate cap insurance to cover the risk of insurance rates going up. And those are running out, like you said. They're good for 3 years, and then you have to renew them if you're executing the extension for the first extension for the fourth year, and they're expensive. I'm doing it right now. And I'm having a cash call, quite honestly. So it happens. I think there was a stigma years ago when I first started that if anybody ever had that, that was a giant red flag. People are entitled to their opinions, but I can name you at least 3 to 5 really good operators reputationally that have had cash calls because of what we just said. So that is the current state. If we can get through this, if we can get through this and get to a place of refinancing, I mean, the talking heads say that rates are going to start coming down towards the end of the year. It's just a matter of how fast they come down or how slow they come down. But I think it's also there. I think there's a ton of cash sitting on the sidelines because of skittish investors the last 12, 18 months. And so there are good deals out there still right now, especially some of those that people are trying to sell so they don't have to refinance, or people are selling because they wanted to get out of their bridge debt. So I'm of the opinion that people always ask, is this a good time to buy? And my opinion is it's always a good time to buy. You just buy very differently. So we buy today very differently than we did 36 months ago.
Give me an example of what that looks like today.
Well, today, and nobody would do a bridge debt loan.
Okay.
Period. Everybody wants to do fixed rate, and they should do fixed rate, even though it's higher, but that because your risk is known then. I think those looking for companies that syndication firms that are vertically integrated. So they have scale and they have property management as well as construction people that do the rehabs for them. They're much better to control their cost than somebody who necessarily doesn't. Doesn't mean they can't do it. It's just easier for them. So the biggest one then is underwriting. It's interest rates and it's underwriting and your assumptions. And are you looking forward with cap rates expanding or contracting? And the conservatism that people profess there is huge. But you probably need more partners today, general partners, because if I was going to buy a property of my own, I'd probably buy a 50 unit maybe or a 20 unit.
There you go. You're getting to exactly what I was thinking. You're in the smaller, and because the larger properties are really being gobbled up by a lot of the larger syndicators, they want those things.
The competition is fierce.
Yeah.
But you're right. There's much less risk. There's much less, I'm sorry, competition at the smaller level. But there's also more different risk, not more, just a different kind of risk.
It's a different, yes.
It's different. It's not more or less. It's just different. But so I think those are some of the factors that big difference. And there's going to be a time. I'm in another big one I'm in Texas, and a big one there is insurance rates. And many of the underwriters have left the market, so there's fewer companies out there. Thus, prices have skyrocketed. But there's going to be a time when underwriters come back into the market and prices begin to drop. And I don't know when that is, but I believe it's probably in the next 3 to 5 years versus 20 years.
Gotcha. I was just interviewing someone recently who is in the coastal um, region for several of their properties, and they're in a different asset class. And they articulated that while they're not in necessarily a flood zone or anything like that, their insurance rates have quadrupled in some areas. And so that it's become a lot harder for them to be able to do rents and things of that sort for their tenants because, you know, if they're on a triple net lease, you know, you have to back into, you know, what the max is that you can actually give to someone. Otherwise, you know, they're unable to get into that particular unit and that particular property. So I agree with you. The insurance rates have skyrocketed from what I've understood. And when I was doing some underwriting before, they were a lot higher. But I go ahead. I'm sorry. You
No,
since
it's going to say it's the whole, like you said, it's the whole coastal from from New York, Florida, Texas, Arizona. I mean, it's the whole coastal states. I mean, we're getting a big storm again this weekend, right? Coming through um, the Gulf again. And so, but people need a place to live.
there
That's
you go.
never going to change.
Never going to change.
And back to your audience, man, be encouraged. There's ways you can get into the market. You don't have to. You can do 100 unit. You can partner with people. Find your brother-in-law or sister-in-law and go out and buy a 10 unit or 20 unit.
There you go. Or you can just get Randy and say, "Hey, Randy, you want to come and partner together and let's go do this 20 unit deal?" Maybe we can get a couple of those together and make it happen.
It can happen. So you get, 3, 4, 20 units, get them in the same market. It's not going to happen in day one. Again, it's doable over 3 or 5 years. And you got some instant credibility. You only need one, right?
Got to get that first one down. Once you get that one, you're ready for the next one. As a matter of fact, they'll be calling you.
Well, they will. The brokers especially will be calling you.
They'll be calling. People will be calling you.
Once they know you're a buyer, yeah, they will be calling. And once the word gets out that Jonathan's got a deal, people are going to be saying, "Hey, Jonathan, will you take a look at this deal with me? I need a partner."
Yeah.
It's an 80 unit in, I don't know, wherever, but and that's persistency, education, persistency.
Absolutely. Well, listen, how can people get in contact with you again, especially about this new education platform that you're putting together? What's the name of it again?
So it's called Multifamily Maestros. My partner, Tony Costernova, and myself, the Multifamily Maestros, all one word, .com. There is a discovery call. Love to chat with you if you're interested. I said $197, 30-day trial. Give us a call. We'd love to chat and we can talk more about it in detail. I'm on the other social medias, LinkedIn, Facebook. My company is InvestArk, so it's invest-ark, invest-ark.com. There's a discover call in there as well. Would love to chat with anybody in your audience, and hopefully we provided them with some good education today.
I think we have, especially around communications and how one should communicate. Well, listen, thank you. We have a tradition here. One last quick question. It is giving us the boot. Now, what that pretty much is what piece of advice would you give to someone who's, say, brand new or is looking to do the next thing? What kind of advice would you give them to spur them on to action, to give them the boot? Randy, give us the boot.
Well, the boot is simply take massive action. That's a Rod Khalifism, and I can't take it. I can't take credit for it, but take massive action. It's a mindset. You got to think about doing something. I was an LP first. I didn't have the money. I partnered with my brother-in-law. We did it through our IRAs, subject of another whole day, but it can be done. And my hand was shaking as I was writing that check, but you got to take a step. Your fear of failure is common with everybody. But you got to take a step. Maybe your first step is calling me and getting some education, or maybe your first step is calling a broker and seeing what's out in your local market, and set about being persistent. Baby steps along the way. I would summarize in persistency in the long term.
Absolutely. Well, listen, thank you, Randy, for this. And if there's anything that we can do for you here, please feel free to let us know.
We do it. Thanks again, Jonathan. It's been really enjoyable.
Absolutely. Take care.